Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, happy Halloween everyone. This of course is a technical analysis review of the stock market, and it's October 31st, Halloween, and this of course goes to Friday, November 1st. We have the big jobs report. We'll see how the market reacts to that. Anyway, I love AI. I just simply asked AI to generate an Halloween themed image based on the stock market, and that's what it gave me. It's pretty cool. You can just do that stuff instead of hiring a designer. Anyway, the market finally had a big haircut today. The S&P 500 fell almost 110 points. That's a big down day. 1.8%. The Nasdaq was down 2.75%. So a huge down day. And just a couple things here. So we'll see where this leads us to. Here's a very simple chart. It's a monthly chart of the S&P. Again, this is super simple analysis, just pointing out an observation here. Last time we had a 5-month consecutive rally, then we had a good 1-month correction in April. Of course, then we started a new uptrend. We have 5 new consecutive up months in a row. So is this now the start of at least another 1-month correction? We'll see. Some other notable things here. Over the last week, I've been discussing these divergences that were really sort of a canary in the coal mine as a warning. So here's the NASDAQ, that's the triple Qs versus the triple Qs equal weighted. All right, equal weighted means every component is equally weighted versus the standard Qs where you have 10 stocks that make up the bulk of the movement. Anyway, you had a really good divergence here where higher high in the Qs, a lower high in the equal weighted. And again, you can see the two move lockstep with each other, almost perfectly in sync. So when these divergences show up, you want to pay attention. And now today we're getting that haircut. And the other one was S&P 500 versus high yield corporate. They tend to move together as well. Again, inflections tend to occur near these divergences. You could see back in October of last year, you had the S&P at a lower low, high yield corporate at a higher low, and that ended up marking the bottom. You also had that divergence there in July that marked the net correction into August, and we've had this divergence for a few weeks now. And finally, it's over the last couple weeks, this has been working out, and especially with today. Gold pulled back as well, precious metals. And remember, we have the unemployment jobs report on Friday. We'll see how that comes back into play. Again, my name is Matthew Frailey. I founded Breakpoint Trades 21 years ago, back in 2003, to provide the most advanced technical analysis, market commentary, trade ideas, and of course my personal passion, which is mechanical trading systems, our 21 SPY and ES mean reversion systems with about 90% winning trades. By the way, we had one of those systems go long today. Of course, our amazing KISS systems as well, which have been killing it. A lot of things have been closing out there. Remember, they're long only, so hitting their stops with that correction. But let's go and get back to this video technical analysis review of the market. Again, hope everyone's having a nice Halloween. My kids are out actually at a Halloween parade. We had our Halloween in our subdivision last night. Every year we have some pretty crazy Halloween decorations. You can see some of these pictures, my house. So Anyway, enough of that. So let's go back to this video at hand. This is our backend recorder for our website subscription service. I'm going to go and get that recording started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. Happy Halloween everyone. It's October 31st. And this is my detailed technical analysis review of the markets. Again, newsletter is divided into 6 major sections. As you know, market finally had that big haircut today. The S&P lost that major pivot we've been discussing, the 5762 pivot I talked about on Monday and on the weekend. Honestly, the market sort of had a lower high wave B look to it. It kept stalling at resistance. We've had all these divergences in place. As you know, I've been discussing ad nauseum the divergences that were shown up on the triple Qs and the triple Qs equal weighting, the high yield corporate versus the S&P 500. all sorts of warning signs were showing up the last couple weeks, finally playing out today. And S&P was down 110 points, 1.8%. NASDAQ triple Qs were down 2.7%, so one heck of a correction. Now we'll see what this builds into. Again, we've had a slew of earnings. Some have been winners, some have been losers. Intel was a winner tonight. Amazon's doing okay. Apple is down after hours. And remember, Friday is the non-farm payroll report. Honestly, the economic news, at least the fudged economic news, and we all know it's fudged because it seems like every month they revise them down, so I don't know why anyone believes them anyway. I'm hearing rumors the jobs report will come in weaker. Maybe the market will take that as a slight positive because then it will think, hey, we can get rate cuts again. We'll see. And got a lot of stuff to discuss, so let's go ahead and get started here. So first off, image number 2. So here's the S&P 500. Now, again, this is the super simple technical analysis, guys, but it's just an observation. From the October 2023 low, market had a monster rally. We had 5 months up in a row, 5 consecutive up months. Then we finally had a pretty nice correction in April. And after that correction, we've had another 5 consecutive up months. So is this now the start of at least a down month? Well, we'll see. Pretty good down day today. Next, image number 3. Here's the VIX volatility system. First off, note it closed outside its upper Bollinger Band. That's important. Now, when it closes back inside the Bollinger Band, that'll give us one of those VIX Bollinger Band buy signals. And you can see these have been really good buy signals. That said, sometimes when it first goes above the upper Bollinger Band from a low position, sometimes it needs a couple closes above it and back below before you get your true bottom. Obviously back in July, August, it needed a third move. But we'll see if that ends up requiring a couple or not. Anyway, big sell-off today. You can see it on the S&P 500 closing below its lower Bollinger Band. And I've been talking about the Bollinger Band's been pinching, which means energy was building and starting to release to the upside today. Some of the warnings I've been discussing the last couple weeks are some of these divergences that I like to keep an eye on. The NASDAQ triple Qs versus the triple Qs equal weighted, where all the stocks in the Qs are weighted equally instead of 10 stocks that represent 50% of the Qs because of weighting. Anyway, you can see the two really just move together almost all the time, almost lockstep with each other. But we had a divergence recently, higher high in the Qs, lower highs in the equal weighted Qs, and that was a warning, and it's finally playing out today. And another one that was showing up was the S&P 500 versus high-yield corporate bonds. The two also moved together as well. And again, this has been on here for the last month or so. See, a couple weeks ago we had a higher high in the S&P, lower high in the high-yield corporate, and you can see now it is playing out for a correction. All right. You can see the last time we had a divergence was in July. That led to a correction. And the last time we had a divergence before that was in October, late October 2023, and that marked the bottom. So whenever you get the divergences between these, it's always something to point out. Another thing here is SPXU. That's the triple inverse ETF for the S&P. You had a wedge pattern a couple weeks ago, and obviously if you bought that wedge and held it, you've done well. That said, big up day today, big gap, closing at the highs, bullish engulfing candle, good volume. That said, there's a resistance coming up right here around 25.50. You can see it with some previous supports. And it was resistance last time in early April, so it's potentially some resistance short term. That said, chart still looks pretty good here. It almost, I could see this maybe pausing here and then pushing higher again. So just something to be aware of. Next, remember, I mentioned that we had one of our mean reversion systems go long today. So we have 21 mean reversion systems. We run them across both the SPY, that's the S&P 500 ETF, and ES futures. So we run them across both instruments. That said, none of the mean reversions triggered on SPY today, but one of them did trigger on ES futures. Now we trade MES futures just because a lot of people, it's easier to stomach that. It's 1/10 of the normal ES contract. So we, the current contract is MES Z24. So the trend pullback system went long today. First entry. These mean reversion systems can have 2 to 3 entries. You could see last time there was a second entry in September. It was a nice winning trade. And so it has its first entry today. Should the market go lower, it's likely to have another entry or two. And it's possible some of the other systems may start to trigger an entry. Anyway, so first entry there. And by the way, we also had a recent one of these systems trigger on ES futures a week ago, and it actually closed out for a small profit just in time before the big sell-off. So here's the trades that have occurred this year. Again, the mean reversion systems have been fairly quiet this year just because it's been a very strong up year. So 27 trades on ES futures, slightly less on SPY, and you can see the current open one. We're in 2 contracts here, and we'll see where this goes. And for example, on a bear market where you have more volatility, you could have up to 100 mean reversion systems. But on years when you don't have that many mean reversion systems, that's where the KISS systems come into play because, they just follow the trend and they do very well at that. All right, so we'll see where this ends up. And again, if you don't trade futures, you don't have to. You could always substitute one of the S&P related ETFs in place, such as SPY or SSO. But again, first entry today, I sent out a trade notification to our subscribers, so you should have that alert. And here's the statistics for that system. The trend pullback is one of the more active systems. First off, profit factor of 11.3, that's pretty good. Profit factors of 3 are generally considered great, so that's very good. 144 total trades in history, 83.3% winning trades, excellent profit curve. This goes back to 1999, by the way, so it's got a lot of history. And again, these mean reversion systems, guys, remember, they don't look to hold the market for long periods of time. They look for statistical, opportunities to get into the market. They get in, they get their trade, and they get out. They're hitting singles. They're not trying to stay in for months at a time. That's not their job. The job of holding trades for weeks and months at a time are the KISS systems. Okay, but anyway, average hold time in trades about 7 days, 9 hours. Again, winning trades only about 6 days, and so there you go. And image number 9. So here, for example, is all the systems that look for longs on ES futures. You can see all these systems. The reason why do I run so many different systems? That's to give us the most trade opportunity we can, right? Some systems trade a lot, some systems rarely trade, but when you got a ton of them, it's kind of like the shotgun approach. Anyway, you can see the system triggering here today, the trend pullback, and then that one that closed out just perfectly a couple days ago. So everything else is flat. Should the market go lower, we'll likely see more of these systems go long, and we'll probably see some of them go long on the SPY ETF. So here's some of the SPY longs. Again, none of these went long today. If any of these other systems go long, I'll send a trade notification out to all subscribers, of course. Okay, let's get back to the general market at hand. So image number 10 shows the index sector table, what transpired today and this week. Again, bloody red day today. Look at these down moves on the major indexes. Those are big moves, guys, especially for the NASDAQ. Down 2.76% on the NASDAQ. That is a big down day, folks. And anyway, down strong losses for the week now. As far as the 21 market sectors, most of the sectors were down today. Not every single sector. Energy was up slightly. It's down for the week, though. And utilities tends to be a defensive sector, but pretty broad-based sell-off here. Technology, semiconductors led to the downside. Semiconductors were down 4%. Currencies, US dollar, finally a little pullback today. Remember, it's been super strong for the last month. It's at some resistance area. And as far as cryptocurrencies, well, Bitcoin's been strong, but it's pulling back with the market here. As you can see, down 3.4% today. Still up for the week. Commodities, well, the index was up today 0.7%, largely because of crude oil. Crude oil is a big factor of the commodity index, up 2.4%. Still down for the week. Natural gas down another 4% today, down 12% for the week. It's all the way back to the lows again. Copper was flat. Uranium down. Agriculture. Again, most of these were down. And precious metals really took it on the chin today. Gold down 1.5%. Silver down 3.25%. GDX, the miners, remember they've been weaker. They tend to lead, down 2.8%, down almost 3% for the week. Maybe we're finally getting that correction in gold. And the bond market, little mix here. 10-year was up, 20-30 year was down. Of course, remember the yield curve 2-year divided by the 10-year. See a little typo there. This should be 2-year. Still, remember, it's no longer inverted. Finally, image number 11 shows the economic news calendar. Again, we've had a ton of news this week, a ton of earnings. Obviously, November 1st, Friday, is the non-farm job payroll report. That's the big one. We'll see where this comes in, guys. If it comes in a little bit weaker, maybe the market would take that as a slight positive because of potential rate cuts. Who knows? We'll see. All right. We also have construction spending, ISM later, and PMI after that. Okay, let's get going. Image number 12. So here's the unemployment rate. Remember, we get this tomorrow with the jobs report. The last time it ticked down to 4.9. Now we'll see if this ends up staying the same or ticking up. Again, longer term, I think this trend is going up just based on these moving averages. Remember, the unemployment rate, as you can see, is like a big, large barge. It tends to trend in one direction for years at a time, right? That's why, even though I'm not a fan of moving average crosses because they tend to be late, using a 5 and 13 month EMA cross tends to give you nice directions of macro changes, trend changes on the unemployment rate. And the fact that this crossed up about a year ago tells me this is likely to trend up over time. Okay. Next, just looking at some of these major earnings we had. Here's Google. It initially had a nice move out of this pattern. By the way, this was a nice bullish pattern, which did move up. And then it gapped up on earnings. It's pulling back here. But this one's held up fairly well, considering some of them. Meta, of course, broke out initially and then just dumped today, as you can see. And Apple, earnings, they lost their trend line support yesterday. We're down today below the 50-day moving average, and they're down in after hours on earnings. Again, plenty of other earnings I'm not going to discuss, but there you go. Oh, one thing I want to mention here. Here's SMCI. Just want to show you this, guys, just from an educational standpoint. Remember, stocks have a life cycle. You can't just buy a stock and hold it forever in most cases. I hear people telling me, oh, I bought Walmart 20 years ago or 30 years ago. I'm never, ever going to sell it. Or, there's always a time to sell eventually. And, SMCI, let's say you bought it back here, man, and you were fortunate enough to have this huge run up. By the way, the KISS systems caught that major move on that. But anyway, let's say you bought this, 2023, and you held it all the way up here. Fantastic. But if you were one of those guys that said, I'm never going to sell ever, look at this thing. It's all the way back. This is like a big Christmas tree pattern, what we call it, right? Straight up, straight down. Another bear flag here. Now it is back into a demand zone. You have the 200-week moving average down there, but boy, this company has a lot of problems, clearly. So anyway, I know their accounting firm resigned recently, so a bunch of problems with this company, but some support down around here. We'll see if it can, dead cat bounce or not. All right, let's move back to the major indexes. Chart number 17. Here's the 5 key major indexes. Again, we've been in this correction really for the last couple weeks now. And look at today's down candle, especially in the S&P, right down to that lower Bollinger Bands. NASDAQ down big. And the Russell down as well. It's still holding its pattern here. The hope is it can hold this little, trend line of this little ascending triangle, perhaps. Moving on, let's look at the S&P 500. So here's the S&P 500 daily KISS system. So again, so far the market, S&P has had a nice correction from that DeMark 9. You can see all those previous DeMark 913 combos. If you don't know what DeMark is, look it up. It's widely used, especially in the professional circuit. Bloomberg Terminal, I know, has it. I consult with a major, one of the, basically I think the largest financial advisor in Morgan Stanley. I do a monthly or weekly call with him, and he uses DeMark all the time. But anyway, if you don't know what it is, look it up. I'm not going to go into it. It's basically a sequence. But anyway, nice pullback from there. Closing slightly below the ATR. Okay, we're still above the smart trailing stop, which is a little bit away, so there's still a little wiggle room. KISS system went long back here in early August, so it is a winning trade. We'll see if it can hold this or not. And image number 19, here's the 4 time frames. Again, nice correction here. We lost the ATR on all these time frames. Okay. On the lower time frames, I don't know if Steve mentioned this yesterday, but we had the ATR, we had the cycle resistance that shows up in the magenta, and that's been cap and price, and that ended up where price stopped over the last several days and then dumped from. Next, moving back to the standard charts, here's the weekly S&P. Remember, we've had this divergence building. Divergence is never a sell signal on its own, but it can be used with other factors. Finally, nice correction this week. Had a pullback last week. We're now into a slight demand zone here. We'll see if that holds or not. If not, you have your uptrend channel line below. You also had a MACD divergence here as well. Again, we've had a hell of a rally run this year. Hell of a rally from the October lows of last year. So again, we have the election coming up, which I'm sure most of you are happy to be done with, quite honestly. But honestly, I could also see some folks being a little nervous, keeping a lot of long positions into that. Next, chart 21, here's the daily S&P. Remember back in August, July, we had that perfect three-wave ABC pullback, wave 4. Anyway, over the last week or two, we've been stalling at that little resistance supply zone. You can see we stalled at that the last several days, and of course, big haircut today. There's a little demand zone down here. Big support around this 5650 to 5670. That was the previous, July highs, which became support there in October. So we'll see if it finds support there. We also closed right at the 50-day moving average today. Next, chart 22. Here's another daily chart. So we've been showing the steep uptrend channel, which we lost today clearly on a gap down. You can see the supply zone up here, look how we stalled there many times. Okay, we couldn't get through it. And then we talked about this 5762 as an important pivot. Well, that was lost today immediately. So we're right down near the 50-day moving average. Here I added some fibs as well. So on further weakness, 38% fib, 50% fib, stuff like that. 61.8% fib if you really get a nice pullback. That would be some areas. By the way, as far as some timing cycles, I don't have a chart in here tonight, but one of my timing cycles has a timing cycle in the first week in November. Maybe that'll end up being a low. We'll see. Next, chart 23. Here's another chart. It's a clean chart. Again, we stalled at that supply zone, as you know, up there, selling off here. And again, now this area in here is a big support zone, which we're getting closer to. Chart 24. Here's the 2-hour time frame. Again, lost that support. We're now into this. There is like I said, a demand zone in here. We're nearing a 38% fib here from the September lows. Chart 25, here's a 60-minute chart. Remember on the weekend, I showed this rising wedge. Well, we ended up breaking the wedge to the downside. So I added fibs from the August lows. 38% fib is all the way down here at 55.88. Remember, you could also draw the fibs from the September lows like I showed you in the last chart. But these are, by the way, this 38% fib actually matches the 61.8% fib if you draw it from the September lows. So you have kind of a confluence there. Next, chart 26. Here's a 60-minute chart Steve discussed in his newsletter on Wednesday. Again, Steve doesn't post to YouTube, so if you're just a YouTube video, that's a good reason to be a subscriber because we have 5 newsletters a week, guys. We only post a couple of them on YouTube a week. So anyway, wedge here, Steve talked about that being a possible wave 5. He said if that pivot was lost, remember we couldn't take out that recent high as he says here, remains a valid option until this is taken out. Well, this was never taken out. And so we're moving down now in this. The positive for the bulls is you do have 3 waves down here now where, could be an ABC. Now where that ends, we'll see. You could see, at least from the September lows, 38% fib here. Chart 27, here's a 60-minute chart. We had a tight coil essentially yesterday. We broke it slightly, of course, and then it just gapped down today strongly into this demand zone. Next, chart 28, here's the Triple Q's KISS daily system. Again, remember, it couldn't get above that weekly ATR. It's been stalling there the last couple weeks. Weekly ATR, the positive one here is in green. That's the resistance one. So we couldn't break it, sold off. We're right near the daily ATR. And the STS, Smart Trailing Stop, is a little bit below that. So the KISS system is still long here, but it's getting close to that stop. Chart 29, here's the 4 time frames. Again, now the daily is still holding the ATR, but you can see on the half day, price stalled right at that resistance cycle. These cycles are all very powerful. I love the cycles. So stalled on the 130 minute there and the 78 minutes. So the cycles have been a really good guide there. Next, chart number 30, moving back to the standard charts. Here's the daily triple Qs. Again, down 2.5% today. That's a big down day today. Smashing this little uptrend line. We couldn't test those recent highs. Got close, but government being close wasn't close enough for government. Wasn't enough. And anyway, just slightly above this 50-day moving average. You got a demand zone down all the way down to here to 477. So let's see if that can hold the support or not. Next, chart number 31. Here's another daily chart. You also had a wedge look to it, and you had the MACD divergence here. Remember, MACD divergence goes along with wedges. If you don't have MACD divergence, it's not a true wedge, but you had the divergence there. So you did have a wedge pattern starting to play out a bit here. We'll see if that continues going. And chart number 32, here's a 15-minute view. You can see how yesterday, that little bounce, we stalled at the supply zone. This is important, guys, because generally, guys, my thing is, like, if you're not long here, you don't want to buy into supply. It's a recipe for disaster. Usually you want supply to be taken out. You could buy it then or let it take out, then buy on a pullback. But buying into supply is always risky, and you can see that's where, if you bought there, you got trapped, sold off, and of course today, ugly day. Next, chart number 33, here's high yield corporate. Again, I mean not high yield corporate, IWM small caps. Again, still in this same pattern. Nice down day today, but still got a little room to this little uptrend line. So we'll see if this pattern can remain intact or not. And there you go on the indexes, guys. Moving on, chart number 34, here's moving on to bonds. Here's high yield corporate bonds. Again, selling off. Remember this channel I've been showing, and I said it may want to fail there and go down into the demand zone. Well, maybe that's the target here. So that's your support down there all the way to this low there in September. Remember, high yield corporate was underperforming, lagging the S&P, which was a warning sign. Next, chart number 35. Here's TLT 20-year bonds. Remember, the one potential positive for the market is that you can count 5 waves down here. And anytime you get 5 waves, you want to look for a reversal. So we did get a bounce here. It's still too early to say if this is bottomed, but you do have 5 waves. You can see the MACD is trying to cross up. So if bonds could start working higher here, that means rates would pull back, and maybe that would give the market a little break. Chart number 36. Here's a way to play a bounce in bonds if you wanted to. TMF, that's the triple leveraged ETF. So it'll give you triple the move of TLT. Looking at the interest rates themselves, here's the 10-year Treasury yield up yet again today. Okay, it's been at a pretty strong rally from the September lows. It's right up around the 61.8 fib. And finally, chart number 38, here's the weekly view. So this ABC 3-wave pattern has been absolutely perfect. I have put in this demand zone, support zone many months ago. Price came down there and rallied right off of it. Now you have the moving average ribbon pinching here on the underside. The hope for the bulls here, this to form some sort of lower high and come down again. Because if this were to rally back to the highs, I think the market would be in trouble. So the market needs that not to happen. So we'll see. All right, moving on to just looking at a few sectors here. Here's XOK technology. Again, similar to the S&P. Again, you had this wedge pattern. Big sell-off today. It's lost its 50-day here. So volume's pretty big. We'll see if this gets a little more ugly or not before it finally bottoms. Chart number 40 here, semiconductors, they've been lagging. They never filled that open gap up there, by the way. But anyway, sell off today. Now you do have some support below 200-day moving average, that uptrend line. Chart number 41, here's the bank sector. Yesterday, tried to make a brief new high, set up a divergence. You can see it there. And reversal. Obviously, if you took a long back here on the ascending triangle, which I talked about weeks ago, that gave you a nice long. Chart number 42, here's biotech. They've been continue to weaken. It's still holding support area, but again, this moves a lot with small caps. We really need small caps to start finding some support in order for biotech to start going. And chart number 43, here's real estate. This is starting to sell off here. Stalled at that resistance recently. Last time it bounced off that demand zone, but I'm not sure if that's going to hold again. When you test demand zones too many times, it becomes weaker. Your next demand zone would be down in this range. And finally, chart number 44, here's XLE Energy. Again, it's been up the last couple days slightly. XLE has been basically in a more of a sideways consolidation since April. And we'll see. Moving on to commodities, chart number 45, here's DBC. So far, it's down about 1% this week. All right, of longer term, it's been in this channel for the last 2 years. Chart number 46, here's crude oil. Again, up day today. Otherwise, the bigger pattern is this downtrend channel. Chart number 47, here's UNG natural gas, down yet again. Remember, it rallied off that support. And I talked about that being a resistance, that test of the underside of the 50-day moving average. Well, that was resistance. Hope you took your profits there, and it dumped again. This looks ugly, guys. Chart number 48, here's copper, essentially a flat day today. Kind of stuck in this demand zone, support zone for the moment. Chart number 49, DBA Agriculture ETF. Talked about this on the weekend, and on Monday you had a 3-wave ABC pullback, possibly a wave ABC into a demand zone. So that was an objective long with a stop right there at 24.78. By the way, the KISS High Performance went long a couple days ago, so it is long with a stop. And some other things. Here's palladium. I've been talking about palladium. I really like the bigger picture chart here. You got a really nice base here. You had nice volume, but you could see it stalling initially in the supply zone. Not surprised. That's your first resistance. That said, any pullbacks here I do think will be bought over time, and I think this will work higher eventually to that next supply zone. Now, when you look at the daily, here's the daily. Again, it was very overbought. It was above its upper Bollinger Bands for 4 days, right? That was extended. Look how wide your moving average ribbon was. So it's having a logical correction here. Again, I think this pullback will be a buying opportunity, but just short term, it was extended. And chart number 52, here's palladium or platinum. Again, this is a monthly chart, guys. Each candle's a month, but this is something to watch because it is in this, 3-year coil pattern. So again, you can trade this PPLT. And here's the daily. You got kind of a complex inverse head and shoulder pattern. It's pulling back here pretty good. Again, just something to monitor over time. Moving on, chart number 54. Here's Bitcoin. So Bitcoin, as you know, has had a nice rally here the last several weeks. Finally pulling back today, so it's off those highs. It did get above this downtrend line, which is a positive, a couple weeks ago. I do believe that last low was a wave 4, right into that demand zone. Now, this did technically, I think, make a slight, what is this, 73.60? I mean, almost took out that high. Again, I still favor over time for it to go higher, but it is pulling back this week, obviously, with the market. And chart number 55, here's Bitcoin on the daily. So you can see it broke out of that pattern. You could draw a steep uptrend channel where it's pulling back from. By the way, this broken trend line is now support. As far as some of the Bitcoin ETFs, again, they're moving the same way. Here's IBIT, had a really nice break from the trend line a couple weeks back. So it's been a good trade, finally pulling back in a little bit. And chart number 57, MSTR, MicroStrategy, which the KISS system has been long. This has had a heck of a move here, you can see. And today it pulled back. Where did it find support? Right at that 9 EMA. By the way, guys, when you have momentum, the 9 EMA tends to act as support. Look at this. The whole time. Yeah, sometimes you undercut it a little bit, but here's a trade strategy. Whenever you know you're in a momentum condition, you could look to place objective buy limit orders near the 9 EMA and pick up shares. Okay, that's how you trade momentum. Next, chart number 58, here's the US dollar. So a little pullback here so far the last few days. Logically, it was pulling back from that resistance area. Again, it's had a hell of a rally from that 5th wave divergent low. Chart number 59, here's UDN. Remember, this is the inverse ETF for the dollar. I've been having this on my newsletters for the last couple weeks as a way to play a pullback in the dollar. And you made a slight new low there on the 29th. You had a MACD divergence there. You actually had a second MACD divergence. So you had a divergence back here at that low. But if you look here, technically you had a second divergence. That second divergence is usually your true bottom or your true top if it's from a high. And broke out of the channel. And it's been moving up. In fact, you could look at the moving average ribbon. It's just starting to curl up from this bearish into a bullish configuration. That's a good guide. And if the dollar is going to pull back, guys, the Japanese yen should bounce. Here's the weekly Japanese yen. I talked about this on the weekend. Broke the downtrend channel line, back tested it. That back test is objective long. You can see it's trying to act as support. Now, the way to play it, though, FXY, that's the tradable ETF. You have the same pattern here. So I went long some of this today. Figure it's low risk. And moving to precious metals, here's gold. Finally a pullback today, down 1.8%. Gold hit $2,800, guys, yesterday. Holy cow. Remember back in March, I was talking about gold, my target being $3,000? Got only 200 points away. Now again, so is this a top? We have some divergence in place. Too early to say yet. We either pull back a little here and we ramp again. The 3,000 round number is pretty close, so it could be a magnet, or we finally have a correction here and test it later. Here's the weekly chart. Again, as you know, parabolic. This is a parabolic curve. These are unsustainable longer term. So eventually I am looking for this wave 3 of 5 high and then a deeper wave 4 pullback. Ultimately, this wave 4 pullback, when it does come, should be a heck of a correction. Or a heck of a buy opportunity, Notice, so right now we have a weekly doji candle. Chart 64, GLL, that's the inverse ETF for gold. If you need a way, if you have some gold but you want to hedge it, that's a way to hedge it. Chart 65, here's silver. And nice pullback here today. Again, there's a channel line to watch. If gold enters a correction, silver will as well. Now, silver on the monthly, again, I love it longer term, regardless if it has a correction here or not. Over time, I think it makes it to the upper 40s and into the 50s over time. I love this 4-year coil that we broke out of. Silver should go much higher over time. Chart 67, here's GDX, the gold miners. Again, the warning we've had is the miners have been weaker here the last couple weeks. You can see this on the ratio. That's the GDX GLD ratio. It's been trending down. Again, we're still holding the channel line, but that's been a concern. Miners tend to lead, guys. In chart 68, here's Dust. That's the double inverse ETF for GDX. I've been showing this as a wedge pattern since last week. Well, if anyone bought it down here, you've done well. It's now rallied to the top of the wedge. We'll see if it pulls back here or actually finally breaks through it. If it does pull back here, I would watch it, guys, to see if it forms a higher low in the pattern, because it may form a higher low in the pattern and then curl back up and finally break out. Now, let's move on to trade ideas. We've had some nice ones. Clearly, a lot of things pulled back today, though. SNCY, this is a long idea of mine a couple weeks back. Resistance was 1175 and, broke out, consolidated, and boom, huge move up today, almost up 10%. Swing stop would now go with that higher low at 1224. Make sure to take some profits, though, just so you don't give everything back. Take some profits. Chart 70, COM. This is the pattern I put on the weekend, and it triggered on Monday. It's given a trade. Now, you do have some divergence here setting up. Now, today, though, it pulled back. It found support at previous resistance, became support, for now at least. Chart 71, Mira, was a long idea of mine last week, which had a heck of a move from that base. So, essentially doubled. Again, when you get a double, guys, in a few days, take some damn profits. Chart 72, Trip. Trip, we had a nice little flag here, which moved up. My target was up here, which still may be achieved, but I took some profits today just because I was worried about the market. It has been a nice trade. Chart 73, IBRX, another beauty. This was one from the previous week that broke out, had a hell of a move. Hope you took your profits. That said, guys, I'm keeping it on here because you can see the pullback here to the 9 EMA. That could be momentum support. Look at your volume patterns. There's almost no volume on this pullback. That is typically bullish. Chart 74, NPWR, another beauty that I had a few weeks back out of this base, was a heck of a trade up to here, 970. So right now that's a resistance. I'm keeping it here because that could be another breakout area perhaps. Chart 75, VLRS was another one from the weekend. And it's given a trade here, but it's been quite whippy, honestly. Chart 76, RX is one we put on a few days ago. It never triggered. In fact, this could be a short if it breaks down this coil. Here's some new ideas, guys. And these I just found simply on a volume scan, all right? So I don't want to put a bunch of ideas out in this volatility, but here's some just based on a volume move. Some of these are biotechs. Here's LICY, big volume today, low priced obviously, but a nice little pattern here to watch. Charter 78 ECVT, another one. Look at the volume patterns today, pretty good, coming out of a base. So Charter 79 Court, yet another one. Now this is quite whippy. It fell all the way to the 50-day moving average today, rebounded off of it. You got a resistance up here at 50, so it could be a breakout trade over 50. Just be careful. Nice volume though. And the final chart, chart number 80 MMSI. This already broke out here. You had the 20 and 50 moving averages pinching. You have your moving average ribbon is squeezed, trying to curl up. Yes, it already broke out today, but the volume was good. The MACD is just curling up. So this is one to watch maybe for some follow through. And I think it could take out those recent highs. Again, unless the market absolutely dumps. But it had a good day regardless of the market. All right, guys. That'll do it. We'll see what happens tomorrow. Quick check on futures. ES futures are up 5 points. And gold is up 7. All right. Anyway, have a wonderful rest of your Halloween evening. We'll see how the market reacts to Friday's jobs. Thanks for all your support. Take care.